Hey, it's Tim from EminiMind, and in this video I want to run through the 1 minute chart and walk through the trade setups from Friday. We've been looking at using the 1 minute chart to both catch entries when halfway backs don't make it all the way to the halfway back, as well as catching reversals. And there's been a few other applications, and so I thought we talked a little bit about it last week on Monday's video, and then in the live trading session, but wanted to run through the trades from Friday while they were kind of fresh in my mind. So if we go to, this is just the 1 minute chart, and this is Thinkorswim here, but you can do that on whatever platform you want. And basically what we're looking to do is sell below the low of a high bar, so the low price of the highest bar. So if we're going up, 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 up from the open, then the entry into a short is one tick below the low of the highest bar. So let's say you put an order here below this big green candle. Well, the next candle trades higher, so we wouldn't fill that order to go short. So you would move that order up to the next highest bar. And I got a couple more examples I can show of that. But what I'm really looking for are these corresponding hammers and inverted hammers at high and low ticks. So corresponding nicey ticks to be a high tick with an inverted hammer and a low tick with a traditional hammer. And then there's a couple other instances where we've got candles that are close to a hammer or like a spinning top or something like that, a reversal candle that we can also use to use for entries. So if you were just looking at a 1 minute chart, let's say, and you were trying to fade highs and lows, you could certainly come in here and put an order one tick below this candle, and then your stop is just one tick above the candle. And then once you get in, then you're just trailing your stop above, because you're short, each candle on the way down until you get a move above the high price of the low bar, and which would be down here. Now, I have found that um, using the same platform, so like with Thinkorswim, I'm sure other platforms do this too, but see how I'm dragging my price on the trade ladder up and down my mouse? And the price, you get this line on the chart. That makes it really easy to hover over the trade ladder, and I'm ready to click and drop an order, and I know exactly what price to use. We did have a trader kindly put some code in the EminiMind Discord that will highlight the high and low of each candle and tell you that price. So like if you're using Thinkorswim for charts and then you're executing on Infinity or Trade Evade or some other platform, you can have your mouse on your trade ladder and be ready to drop your order, and you can see exactly what price it is that you need to drop your order on. Because 1 minute chart, the candle's going to close, and it might only be 3-4 seconds, sometimes quicker, where the next candle starts to form, and you got to drop your order really quick. So that's kind of the challenging part of this strategy. But after a handful of trades, you get the hang of it pretty quick, and you get pretty proficient at it. So just by taking low of the high bar trades, so selling below the low of the high bar, or buying above the high of the low bar, longs, you can fade all day long when the market comes back up. So this was the open, we rallied, we sold off, and then we came up here and we kind of made this double top, and you just come in here and say, okay, well, here's a double top. I'm going to not even pay attention to the nicey tick, and I'm just going to sell one tick below this inverted hammer and then ride it down. The entry one tick below would have been a 40, 80, 75, and then if you just trail your stop, ends up being a 40, 77 and a quarter. So, you can be catching 3, 4, 5 point moves very easily. And then you get in some situations where, even like down here, you get that would be 40, 59 and a quarter. And if you're just trailing all the way up, essentially you would end up with this bar here at 808, and it's 4070. So 4069 and 3/4 would be the exit point. So you can catch 10-point moves sometimes in 10 minutes. when you get these clusters like this where you have a big breakout bar and then inside bar, inside bar, inside bar, just leave the stop alone below the breakout bar and wait for a new bar to break out before raising your stop. That's something that I do on daily charts and in other charts as well. But one of the things you can do to kind of pair this with the fib retracements, because I've been doing the retracement halfway back, whatever you want to call it, that strategy for like 15 years. And I've had traders, bring up the idea of, oh, what can we use for some additional confirmation? Can we pair it with, a breakout at the halfway back? And I've always shied away from that. I've just bought the halfway back. So like, if I just pretend that there was a swing low like this to swing high and just putting a limit order at the 50% and letting the market come down to that limit order, fill me, and then go. That's always been the way I've traded it, and it's worked really well. But there are some instances where, like, let's say we draw the full halfway back here and the market pulls back, but it does not trade at the 50%. So let's say I had an order at 40, 71, 75. That would be the long there. I put the order out there, no fill. My order is just sitting there. Price does not come down low enough. But then if we look here, 830, and if we go to the nicey tick at 830, this point here, we do have a relative low tick for the last half hour or so. It's not the lowest tick of the day, but relative to where we had been trading, above the zero line, this is a relatively low tick. And so you could do a high of the low bar, 1 minute entry, where you're putting your order one tick above the candle's high here. Now this is an example of one of those where it's like a spinning top. It's not a true hammer, but it's still a reversal candle. One tick above the high, so be 40.77, and then just trail your stop on the way up. Again, this little bar is just an inside bar, so your stop would stay below this green bar here, next bar, and so you go from 40.77 up to 40.8150. So all of a sudden you start catching 3, 4, 5 points on 3, 4, or 5 trades, and even if you're just trading a couple of contracts, you can really rack up some quick profits. And I know there's a couple of traders specifically who I'd been chatting with that had been using this on the Top Step Combine and just crushed that thing really fast, and we're able to stay within the parameters. The retracements, we have a lot of traders who go through the Top Step Combine using the retracement strategy as well. But if you were trading that last week, or I guess the week prior, there was not a lot of activity. And so, it was kind of a quiet week, whereas the 1 minute chart actually did give a lot more opportunities for entry, kind of if you pair it with the retracements or if you're just kind of fading highs and lows. So if we take this 821 inverted hammer here, and then if we go to 821 and the nicey tick, so you got the high tick of the day at this 1 minute hammer. The candle's just under 5 points. So you have if that's the candle size, you would want to expect a move to, the target or so. I guess target isn't the greatest word, but like you don't want to have, if you have a giant candle for some reason, like a 20-point candle, that might be a little bit big. But realistically here, a 5-point candle, and then the low of the candle was 81, so then you trade it down, and it trades to 77. So you're like 4 points, close to 1-to-1, but it's still, look how quickly it breaks the swing, the low of the candle, and then boom, 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 3 red candles in a row. And that's the really nice thing about the using this kind of low high bar, high low bar breakout intraday is you get in the trade and it is immediately positive. Like it's immediately in your favor. And then boom, a minute goes by and you're already tightening your stop. So there's not that many situations where I've seen get a quick stop out. If we do go later in the morning though, I wanted to show, I don't know if I'm going to be able to find it now. This one here. So here is an inverted hammer. It's not really, if you draw the full halfway back of the day, it's pretty far away. So like, see this guy here? That's 66, and the halfway back is up at 72. So that's quite a ways away from the halfway back, and that was 9:40, and these are all on Mountain Time. So 9:40, that is here. So you do have a relatively high tick, and the market did break that candle by a low by one enough to get into the trade, and so that would have been a stop out. It was a little over 3 points. That would have stopped you out. But the way to stay out of those kind of trades is to say, okay, this is clearly not an inverted hammer at highs. It's not like up here where you've got actually a bearish engulfing candle outside of the inverted hammer at highs. This one is kind of way down here, and the 50% is way up here. So if I was going to take a stab at a kind of intraday short that wasn't up at highs of the day, I would like it to be closer to the 50%. So the high of this candle up here is just shy of 40.71, and then the 50% is 40.72. So within like a point and a half, getting closer, this would make a much better short. And so that was 947. And if we go 947, high tick, not the highest tick of the day, but the highest tick of the most recent cluster here for the last half hour. So this one would be a worthwhile short. And then again, just going one tick below that low, be a 40.68 would be the entry. And then boom, you break, and the trade never goes against you. You never take any heat on the trade. And then it's just 1 minute goes by. Trail stop, trail stop, trail stop. Boom, boom, boom. What did I say that was? 68. And the exit is a 61. So like boom, 7 points in less than 10 minutes. And so, you start racking up some, and you can see there's a lot higher frequency of these trades too, which is really nice. Sometimes, average for retracements in the morning session, I'm usually only like 2 or 3 or 4, so not a whole lot of entries for the retracements. Now I'm okay with that. Trading uh, less has made me more over the years than over trading, but something like this might resonate with you. That style of getting into a trade, even like when you come down here and you see this is like upside down V here, and you come down, you get this hammer, and let's just for kicks check what the low. So this one, 957, is over here. So again, not the lowest tick of the day, but it is a low-ish tick. But look back here, 954. That tick, nicey tick, is lower than 57. So if we came over here to 54 and we put an order here, one tick above this little hammer, well, we never broke above that candle. We went lower before we went higher. So then you would just bring your order down. So even if you tried to get in one tick above this red hammer here on this lower tick, it wouldn't have filled you. You would still end up getting in down here. And then, this is 61, and trail takes you up to a 66 and change. So boom, another 6 points. So it's like these, and this is only the early morning session, or kind of get later morning, I guess, starting to go into the lunch hour. But you can kind of take these trades all throughout the day. I might stay away from the close, just because the market can move really, really quickly, and a lot of times there's like a lot of settling trades that's going on, and so Friday at the close is pretty messy, and I typically don't trade the close anyways. I'd rather focus, wake up, be focused in the morning, get my trading done, and then hour and a half, 2 hours into the day, and then you can go do whatever it is you like to do, golf, bike, whatever. And so I would still focus on the morning session, but there's definitely been a lot of opportunities, even if and also a lot of wiggle room. Like um, if you don't get it just right, or you feel you make a mistake here and there, maybe it's not the highest tick of the day. So long as you're getting in on like hammers and inverted hammers, you can really do quite well. And even if you come in, like I said, intraday, something, let's just say you drop a low to high like this, and we come down, we don't quite make it to the 50%, but this one is at 810, back her up here, 810, So you say, okay, we're right here. So we were down in this low cluster, we shot up, and at least we're in a low-ish tick. So if you don't want to be getting long when the market is up here making high, nicey ticks. And that goes for any entry. So even if you don't want to trade this 1 minute approach here, try and just glance at the nicey ticks and avoid getting in longs in high ticks and avoid getting in shorts in low ticks. But if you just kind of keep your eye out for these hammers and inverted hammers and then correspond them with relatively low and high ticks, it's definitely something worth looking into. And as I progress in continuing to trade this approach and kind of pair it with the retracements, I'll be able to report back on some bigger kind of like metadata with a whole bigger data set. But if you do have questions, you can drop them in the comments below. We've also been chatting over on the EminiMind Discord about this kind of stuff too. So hope you find that helpful, and I'll talk to you soon.